The evolution of the Islamic financial architecture within the dual banking system of Malaysia represents a profound, multi-decade transition from a localized niche window into a dominant, systemically vital financial force. Since the historical promulgation of the Islamic Banking Act 1983, the Malaysian state has intentionally engineered a parallel financial infrastructure capable of absorbing massive retail liquidity while remaining strictly isolated from conventional financial risks. Operating under the internal ethical guideline of Islamic commercial jurisprudence, this parallel banking framework is philosophically and structurally forbidden for engaging in any transaction tainted by a trace of riba, security gambling or maisir, and excessive custody of gara. As the contemporary global economy faces persistent inflationary adjustment and volatile monetary tightening cycles, the absolute stability of the Islamic banking segment offers an alternative model based on the tangible wealth creation rather than artificial paper asset inflation. In Malaysia, Islamic banking assets now account for a systemically significant percentage of the total banking ecosystem, reflecting a high level of the consumer trust and institutional maturity across the both Muslim and non-Muslim customer demographic. Bank Islam Malaysia Berhad holds a distinct and legendary position in regional financial history as the nation's very first full-fledged stand-alone Islamic banking institution, opening its commercial door in July 1983. Unlike conventional legacy banks that merely operate secondary Islamic window or detached subsidiary, Bank Islam was entirely conceived, capitalized and structured from its inception to run on pure Sharia principle. Over its multi-decade history, the institution has expanded its branch footprint comprehensively across Malaysia, establishing a major presence in a state with high demand for ethical financing such as Kelantan. From an operational perspective, Bank Islam is not merely a commercial entity seeking raw profit optimization, it serves as a primary driver of Bank Negara Malaysia Value-Based Intermediation (VBI) framework. This corporate philosophy mandates that financial institutions deliver a sustainable, positive impact to the community, the economy and environment through their product design, ensuring that customer wealth preservation is prioritized alongside corporate growth. Within Bank Islam's extensive consumer product suite, the Baiti home financing facility represents a highly successful and competitive pinnacle of modern Islamic financial engineering, developed to directly challenge conventional compound interest housing loans. This product is designed specifically to assist retail property buyers in acquiring residential real estate, land package or complete development, as well as executing the restructuring of legacy conventional home loans. The Baiti home financing structure completely replaces the traditional relationship of the debtor and predatory lender with a formal asset-backed commercial trade framework. The product caters to a wide spectrum of the retail property categories, including properties under construction, where funds are disbursed progressively to developers based on architect certificates and complete properties bought directly from a secondary sale market.
Let us now turn our attention to the next slide, which addresses the comprehensive regulatory framework and policy compliance governing our chosen retail asset product. It is crucial to understand that the operational, legal, and structural parameters of Bank Islam Baiti Home Financing I are not merely governed by internal bank policies. Instead, they are bound by a rigid, highly comprehensive legislative architecture enforced stringently at the state level right here in Malaysia. The supreme statutory pillar that anchors this entire financing facility is the Islamic Financial Services Act, or more commonly known as the IFSA 2013. When IFSA 2013 was introduced, it completely revolutionized the Sharia regulatory landscape in Malaysia. It shifted the industry away from voluntary guidelines by introducing strict compromise and accountability. For the first time, the law established direct criminal liability and severe financial penalties for bank directors, executive officers and Sharia committee members who fail to maintain absolute hands-on compliance with Islamic commercial law. If you look closely at Section 28 of IFSA 2013, the statute explicitly mandates that an Islamic financial institution must ensure that its overarching aims, its daily operation, its business processes, and its core product structures do not contain anything that is non-compliant with Sharia principles. What does this mean in a practical sense for Bank Islam? Under this uncompromising statutory regime, if a retail product like the Baiti Home Financing I suffers even a minor operational or process breakdown, such as an out-of-order execution during the electronic tawaruk cycle, the bank cannot simply overlook it. Bank Islam is under a mandatory legal obligation to halt the financing facility immediately and formally report the infraction directly to the central bank, which is Bank Negara Malaysia. Moving forward, let us break down the exact operational rules that govern the underlying contract of this product to prevent Islamic financial institutions from turning the tawaruk arrangement into a completely virtual, fictional bookkeeping exercise. Bank Negara Malaysia actively enforces a highly rigid tawaruk policy document. This regulatory master tab lays down explicit granular operational standards that Bank Islam must strictly satisfy on every single consumer transaction, without exception. As highlighted on this slide, this is achieved through three non-negotiable structural pillars. First, we have the absolute requirement of ownership, legally referred to as CAP. The policy document strictly mandates that Bank Islam must achieve valid physical or constructive possession of the underlying commodity before it can legally sell that commodity to the retail client to prove that a genuine trade took place. The transfer of risk, even if it occurs for only a fraction of a second, must be completely traceable and explicitly verifiable via digital transaction timestamps. Second, the policy outlines a strict sequence of execution in traditional banking. Activities can happen concurrently, but here, the bank is strictly barred from executing the initial procurement contract from broker A simultaneously with the financial liquidation sale contract to broker B. A clear sequential and chronological timeline must be maintained, verified and recorded digitally within the bank's trading system. Third, we must look at the independence of transactional parties to ensure market integrity. The commodity supplier, which is broker A, and the ultimate commodity buyer, broker B, must operate as completely separate legal entities. They are legally prohibited from sharing board members or having interconnected corporate ownership structures. This ensures that a genuine arm's length market trade actually occurs rather than a synthetic artificial internal loop designed just to generate profit.
The first trend is absolute protection against compounding debt inflation. The primary advantage of the product is its total immunity to compounding interest loops. In a conventional mortgage, when a consumer default, the unpaid interest charge are added back into the principal loan balance, creating an exponential debt spiral. Baiti Home Financing I utilizes a flat non-compounded rate compensation mechanism. The penalty rate is heavily restricted by BAM to a maximum of 1% per annum on overdue installment, and it cannot be capitalized into the core principal financing balance. Moreover, the safety net of the fixed ceiling profit rate (CPR), although Baiti Home Financing I operates as a variable rate product linked to the SBR to stay market competitive, the underlying contract established a legally binding ceiling profit rate, typically capped around 10% to 12% per annum. This cap is locked into the original Murabaha agreement. If global macroeconomic shock caused the OPR to spike dramatically, a conventional borrower rate could rise indefinitely, whereas Bank Islam effective charging rate stopped completely at the pre-signed CPR limit, providing consumer with a vital long-term financial shield. Besides that, total absence of lock-in penalties and statutory IBRA rights. Many conventional mortgage products penalize clients with a 2% to the 3% fee if they attempt to pay off their housing loans early within the first 3 to 5 years. Baiti Home Financing I features zero lock-in periods. Furthermore, under BAM regulatory framework, consumers who settle their financing ahead of schedule have a legally protected right to receive IBRA, which is rebate on all unearned deferred profit segment, ensuring that early redemption are highly cost-effective. Lastly, prestige cash flow relief mechanism. The product is incorporate a highly popular retail feature known as a payment holiday. During the month of November and December each year, the bank offers customers the choice to temporarily pause installment payment, freeing up consumer cash reserve during heavy year-end holiday spending season without triggering default status or punitive compounding penalties. Let's move on into the weaknesses. Firstly, excessive contractual lawyering and onboarding friction. The tawarruk mechanism requires an expensive suite of legal documentation to testify Sharia validity. A consumer cannot simply sign a standard loan document. They must sign the purchase agreement, the agency purchase wakalah appointment form, and the deferred payment sale agreement. This high level of structural layering increases processing times, complicates digital onboarding loops, and creates a heavy informational burden for everyday consumer who struggle to understand why they are buying and selling palm oil just to secure a residential condo. Moreover, systemic dependency on third-party commodity platform. Because the validity of the financing hinges entirely on the actual trade, Bank Islam mortgage generation engine is completely dependent on the technological uptime, transaction capacity, and the structural liquidity of the external system like Bursa Asila. If the commodity exchange suffers a technical network outage or experiences a severe supply shortage or certified palm oil warrants, the bank's ability to process real estate disbursement is instantly bottlenecked, creating a severe operational friction for developers waiting on funds. Lastly, persistent scholarly critique on organized tawarruk, which is HIAL. From an international jurisprudential standpoint, tawarruk-based banking product face continuous academic criticism from prominent bodies such as the International Islamic Fiqh Academy of Jeddah. Critics argue that organized tawarruk is an artificial legal loophole designed to mimic the exact financial result of the conventional interest-bearing loan, because the consumer has zero intention of even taking physical delivery of the underlying palm oil. Critics claim that the commodity act as a fictional shadow asset used merely to legitimize cash lending, creating an ongoing reputational risk for purist Islamic banking clients.
To conclude our analysis, Bank Islam Baiti Home Financing I stands as a highly sophisticated Islamic financial product that successfully fulfills modern retail home ownership needs while maintaining strict compliance with Malaysian statutory law. By anchoring its structural framework on a highly regulated, multi-layered tawarruk architecture, the product effectively protects everyday retail consumers from the predatory compounding interest mechanics that often plague conventional banking during severe economic downturns. We acknowledge that there is an ongoing academic and jurisprudential debate regarding the banking sector's heavy institutional reliance on organized tawarruk for liquidity generation over direct equity or asset sharing models. However, from a consumer and regulatory standpoint, the product remains an exceptionally stable and reliable instrument. Ultimately, its strict integration under the powerful statutory oversight of IFSA 2013, combined with Bank Negara Malaysia's operational standards, successfully safeguards consumer confidence. It enforces absolute pricing transparency in the market and crucially isolates the broader macroeconomic ecosystem from cascading, unmanageable household debt cycles. Thank you very much for your time and attention.
For the first recommendation, the full integration of the algorithmic blockchain smart contract is to eliminate the operational risk of Sharia non-compliance caused by human transactional error. Bank Islam should entirely automate its tawarruk trading loops on Bursa Asila using blockchain-based smart contracts. By recording the mandatory Sharia transaction sequence directly into the decentralized self-executing ledger, the purchase, constructed ownership transfer, and subsequent liquidation sale can occur flawlessly in seconds. This will entirely eliminate processing error, lower operational overhead costs, and drastically accelerate disbursement speeds for home buyers. Moreover, the development of a digital single-click consent architecture is to counter the operational weakness of heavy legal communication friction. Bank Islam should redesign its consumer onboarding interface, By utilizing advanced electronic signature framework and biometric validation within its mobile application, the bank can consolidate the dense collection of wakalah agency form and murhabahah disclosure sheet into the streamlined interactive digital sequence. This preserves full legal compliance with the tawarruk policy document while matching the speed and accessibility of modern fintech platform. Lastly, a strategic portfolio migration toward true equity sharing model is to protect its long-term corporate reputation against the scholarly criticism regarding tawarruk legal loopholes. Bank Islam should systematically diversify its retail asset mix. The bank should gradually transition its memory property financing focus toward authentic risk-sharing equity contracts, such as musyarakah mutanakisah, which is diminishing partnership. By engineering a mortgage facility where Bank Islam and the customer act as genuine co-owner of the property, where the customer gradually buy out the bank equity stake through the fair rental contribution, the bank can champion a more socially responsible, sustainable and authentic financial ecosystem that align perfectly with the core principle of the value-based intermediation.